Wanted to dig in specifically to that 20% growth in China, because we've seen such a mixed picture from U.S. companies like Caterpillar and Apple, which are seeing significant slowdowns in China. It doesn't appear that you're seeing it at all. So talk to us about what's happening on the ground there as a result of the trade war and the Chinese slowdown.
Yeah, so our business in China, they're essentially two segments. We participate in the Baijiu market, Chinese white spirits, with a brand called Shuijingfang, which is an expensive product. And then we participate in the high end of Scotch whiskey. So like Johnnie Walker Blue and our single malts. Both those businesses are growing double digit. And in part because the trends towards private consumption and people wanting to drink better, and in the case of Scotch, discover new special whiskies, that trend is strong, and we benefit from it. And so as I look out, the consumer, we are not immune from an economic or consumer confidence slowing down, but we're better positioned because our business, and it's company specific, we've got very good businesses that are on trend, and we're executing well in that marketplace. We're innovating and building brands the right way, and so I'm really pleased with our momentum there.
On the U.S., we've seen increasing signs that this is a good consumer environment, but it may be as good as it gets for now. Consumer confidence, for instance, recently slipped. Can you look down into the future, the rest of 2019 and into 2020? Do you see any evidence of a slowdown for the U.S. consumer?
Hard to see a sustained shift yet, but as you point out, we're watching it closely. Again, this is company and sector specific. Part of what we benefit from in the US is a trend where people are moving to spirits and cocktails in a bigger way from wine and beer, and people are trading up for more premium brands. That trend is very strong and continues on a secular basis. So while there will be some impact from an economic slowdown, we're not seeing it yet.
I also noted the very strong growth that you're seeing in the UK. How do you characterize the risk at this point? There's no Brexit deal on the table to your business if the UK does crash out of the EU by March 29th with no deal.
Well, we clearly want a deal, and we are really wanting all parties, the politicians, to come together and get to a deal. Having said that, if you look at Diageo's business, we make a lot of our products, Scotch whisky in particular, and gins in the UK. 95% of what we make here is exported. We are a global trading company. We sell 7 bottles of Johnnie Walker every second across 180 countries. So the impact of Brexit for us is less. We're fortunate because our supply chain is mostly indigenous in Scotland. It's barley and water and peat and women and men and thyme to produce expensive Scotch whisky, which we then export. And we can trade within Europe tariff-free. So the impact of Brexit on our company itself is manageable. Having said all of that, we are really keen to get to a deal, and we're totally against the notion of the UK crashing out with no deal.
I would think that the currency risk is there for you as well. I mean, you're already feeling some currency pressures. How tough is this environment right now when it comes to the foreign exchange swings?
Well, again, Diageo has a very good balanced position of currencies around the world. I mean, the US is our biggest profit contributor. So we have a strong dollar business coming out of the US. We source out of the UK for about 25-30% of our business, Scotch whisky and gins, etc. So we have a natural hedge. We sell all around the world. And we've grown up as a company used to managing volatility in currencies. Clearly, we don't like volatility. We would like stability. but it's something we are good at navigating through the volatility of, and the company is agile and responds to these shifts quickly.